Oh, we are live. Happy, what's today? Tuesday, everybody. We have made it out of the thickness of income tax season. Hopefully, you are able to file or get your extension in place. I want to talk about how you can save on taxes legally. A lot of that has to do with tax planning. So, for those of you who don't know me, my name is Tremaine Wills. I am your go to financial strategist. And we're going to talk about how you can keep more of your money through smart planning, specifically around tax planning. A lot of us like to think about tax time as like this one moment of time where it's just a couple of months of gathering documents. And the reality is, if that's all you're doing, you are not doing tax strategy well. So if you are self-employed or a side hustler or small business owner and you are tired of getting beat up by taxes, this is the live stream for you. So before we dive in, I do have one question for you, and you can let me know in the comments if you are tuning in live or if you are watching the replay. Let me know if you currently have a tax plan. Or do you just hand over everything to your tax person in February or March and hope for the best, right? We're going to dive into why tax planning is not tax preparation and why you need both. Okay, so let's start there. Tax preparation is what happens after the year is over. You are identifying what happened with your financials, how much profit you had, how much you spent to run your business if you're a small business owner, and it is just reporting the transactions that already occurred, right? So for the most part, the damage is done. But tax planning is happening throughout the year before the end of your fiscal year, where you can identify strategy to legally reduce any tax bill you might owe, right? And so come tax time, a lot of us want to make sure that, how can I reduce my tax bill? That doesn't happen at tax prep time. That is something that you do before tax prep time, and you have a strategy in place throughout the year that you are following. Okay. So, without a plan, you are probably overpaying in taxes. And I'll share some numbers where many of us, especially small business owner, if you are making significant money in your, and by significant, I mean like more than $80,000, right? You are probably overpaying in taxes if you don't have a tax plan that you are following. Because if we're not intentional, we're kind of reactive. And that puts us in a position where we are looking at, tax prep time where we're like, okay, what can I do here? Where the bulk of what could have been done should have happened before the end of the fiscal year. If you don't have a plan, you're probably missing deductions, right? Because again, this is a reactive thing that you're doing at the end of the year. You're not being intentional with the strategy that you're going to use to make sure you qualify for particular things. You're probably ignoring retirement contributions. And a lot of us don't think about retirement. Planning as a way to strategically reduce our tax bill. But when we are working in the private sector, oftentimes we get a 401k, and a big part of that is reducing our taxable income. And so you can do those same things in your business if you are being strategic. And then another thing that you're not thinking about is you might be operating in the wrong entity structure. So we often hear about, should you be an LLC or should you be an S corp, and when does that happen, right? But a lot of that comes through the planning piece. It comes through having the strategy together to know why it makes sense to switch to an S corp, being taxed as an S corp, or why you should be taxed as an LLC, right? And so all of this comes with the planning. It's not just something you up and decide at preparation time. Okay. So if you're watching this and you are catching it like around the time it's gone live, we're at May. No, we're not in May yet. We're in April. You have lots of time to put together your strategy where you're not scrambling to figure out what else can I still do, right? Oh, I see you. Hey, in the comments. So let's talk about what to track and how you can begin to plan so that you can legally reduce this tax bill. So, things that you should be tracking all year. Most of us are pretty good about tracking our income, right? The revenue that is coming into the business. So, we want to stay on top of that. You also want to track and categorize your business expenses. Many of the things that we need that are necessary and ordinary are deductible expenses in our business. But if you are not tracking them, it's nearly impossible to be able to deduct it. So, this is where great bookkeeping comes into play because that's going to allow you to see the transactions that are happening and make sure that you are accurately capturing those. You want to track your mileage, your travel, any meals. That are happening while you are engaging in business, home office use, right? Especially with the rise of um, virtual meetings and being able to run your business out of your home. If you have a dedicated space that is just for business, part of that use is deductible. If you have payroll, now, of course, if you're doing payroll, you absolutely want to be more intentional about this. And then any retirement contribution. So, all of these things should be some of the core things that you are paying attention to inside of your business. Now, what are some key planning moves that you can make, right? Maxing out any deductions before the year ends. So all the things that you are eligible, taking advantage of it before the year is over, right? This is the planning part. Paying yourself correctly, right? So depending on the structure of your business, if you should be on salary or if you should be taking a draw, those things. Considering if you need to switch to S corp election, if you're at the right income level, right? So there is no, if your business is hitting this number, that's where you should make the switch. This is where you want to sit down with somebody and have them do an analysis of the cost of switching to an S corporation and any additional fees that might be associated with, and what does the trajectory of your business profit look like, right? Because we know that every single year is not exactly the same. So it's important that any changes that we make are actually a good fit for our business that don't end up hurting us in the long run. Okay. And then investing in your business strategically before the end of the year. So you may see that this is where people are being encouraged to make purchases in that fourth quarter. A lot of that is because tax planning is happening, right? How can we buy things that are going to improve our business and then also reduce that tax liability that we have? So, my next question for you, are you currently tracking your business expenses and are you tracking it monthly, quarterly? How are you doing those things? So, now let's get into some common questions that are related to tax planning. So, first question, of course, what is the difference between tax prep and planning? And I talked about that briefly in the beginning. Tax preparation is what happens when you are reporting what occurred throughout the fiscal year. Tax planning is putting strategy in place to legally reduce your tax liability. Okay. This is the activities that happen throughout the year so that you can reclaim as much of that money as possible and pay what you owe legally. Question number two, what business expenses are actually deductible? Now, this is a great question because sometimes we think if I pay for it with my business card, it's business expense. That's not true, right? So we want to make sure that we are having any ordinary and necessary expenses to run the business, right? So that is going to look like maybe software that you might have to use, supplies, things for your office, any travel that is required to complete business activities, marketing, right? Things like that. And oftentimes we'll see people talk about, well, what if I purchase some clothes to speak at an event, right? Was that a necessary and ordinary expense, right? Is um, purchasing that clothing necessary for you to speak at that engagement? And more often than not, sometimes that is actually not a deductible expense. Now, if there's a uniform you have to wear to do what you do, then we might be talking about something different. But for many people, we want to be very mindful about what we deem as ordinary and necessary expenses. Question number three, should I be an LLC or S Corp for tax savings? So LLCs are simple, right? A lot of us like, the fastest path to cash, right? Which you want to keep things clean and simple because it allows you to um not make things convoluted, right? But when you switch to an S corp, it allows you to reduce self-employment tax. So when you get to a particular threshold, it does make sense to make the switch if you are anticipating that, hey, my profits are going to be above a particular point, and at that point, you want to identify, okay, when does it make sense to switch to S corp election so that you can reduce that tax bill. But when you make that switch, you have to put yourself on salary. So that can look like um, a little bit more rigidity in how you're operating your business. So this is going to be important to sit down and identify, is my business at a place where I can maintain this salary that I'm required to pay myself? Question number 4. Can I deduct my car or mileage? The answer is yes, but you can't do both. Okay. So you can either choose standard mileage or you can do actual expenses. Now, the point here is track it, right? There are lots of different apps that you can use to track what's happening. But if you haven't already been doing that, you need to start doing that. Question number 5. Are meals in travel still deductible? The answer is yes. Okay. 50% of your business meals are deductible. And then 100% of travel is deductible if it is business related. Okay. And so if you find yourself wanting to take more trips, you need to make sure it is business related so that is an actual deductible expense. If it's not related to business, it should not be paid for through your business account. Question number 6. How do retirement accounts help with taxes? So we talked a little bit about this where I mentioned 401ks when if you might have had a previous employer. Contributions to a SEP, IRA, or simplified employee pension, solo 401k. So you can set up a 401k just for yourself or your spouse if you don't have any employees. And traditional IRA contributions reduce your taxable income. And so this helps you to reduce how much money has to be paid in taxes, but also still retain that asset. It's just being pushed into a different bucket. So I like to encourage people to leverage retirement vehicles because it doesn't necessarily mean you are buying something, right? That you go out and purchase some equipment or vehicle in order to reduce that tax bill, but essentially you're getting to shift the money from checking account into retirement account, right? And in that vehicle, it is likely going to appreciate in value compared to buying an asset that is probably going to depreciate. So you can use your retirement accounts in those ways to help with taxes. Question 7. Can I hire my kids to save on taxes? The answer is yes, right? And this is a common strategy that people are using. The caveat here is that the kids actually have to work in the business and it has to be a job that is appropriate for their age, right? So you can't decide to make your 6-year-old the marketing manager, right? And there is an income threshold where it is tax free. So every year, of course, the amount increases, but we're looking at somewhere between 13, almost $14,000 that is tax free that you can pay your child and deduct it as a business expense. So you just have to make sure you go with appropriate documentation, job description, all of that great stuff when you are going on this route. Question number 8. What is the best way to stay tax ready all year? Now, of course, this is making sure you keep accurate records. So, you want to engage in monthly bookkeeping. You want to make sure that you are paying your estimated quarterly taxes, right? And this is going to help you have no surprises. Oftentimes, we're surprised at tax time because we have not been appropriately tracking. And so, we're not sure where we stand with our taxes. Question number 9. What if I can't pay my taxes? So, what if you get to a place where it's time to file and there's no money available? It's still important to file. So that way you can eliminate the failure to file penalty, but you might be penalized for failure to pay, right? So, there's an opportunity to get on, a payment plan, depending on the amount. But at the end of the day, the most important thing is still file, even if you don't have the resources to pay, because you'll eliminate some of the penalties that come with not filing. And our last question: when should you hire a tax planner or a CFO, which is a chief financial officer? That is gonna be when you get to a place where you are making a significant amount, right? And significant is relative, right? But when you think about small business and how most people are not making even $50,000 a year, if you've gotten to a place where your business is making over 75 and you're getting up to the six-figure point, you probably need to have some tax strategy in place, especially if you have higher profit margins. So, for many people who are watching here, you're probably a service-based business owner, you might be working from home, so your overhead is low. And so, $75,000 might be 60K in profit, right? And now you're getting to a place where, okay, that tax bill, that tax bill going, it's gonna be a couple $1,000s if you haven't been um proactive with strategy. And so this is where it's important to say, okay, I've made a decent amount. How can I reduce this tax bill as much as possible? Getting with a professional that's going to help you plan that is going to be in your best interest. Okay, so now let's talk about some planning mistakes that are commonly seen. Of course, number one, waiting until March, right, to get organized. This is something that you want to be intentional with throughout the year. So that way there are no surprises, right? Another common mistake is not making estimated tax payments. Um, Typically when you file, well, not typically, your tax preparer should be providing you with this. um you'll have a document that says what your estimated payments might be for the upcoming year, and that is something that you can use to guide you, assuming you'll have similar income the following year, to know, okay, what can I estimate that I should be paying. Now if your income increases, then of course you probably want to pay a little bit more to accommodate for that. But this is giving you some information about what you can expect. So that way there are no surprises, right? And then you can run a more efficient business. Another common tax planning mistake is not knowing your profit margins or your tax bracket, right? Um, Not knowing your profit margins will put you in a position where you think that you won't be paying X amount of dollars in taxes, but because there is so much profit, right? That's what we're taxed on as a small business owner, you end up paying more. So it's important to really know where you stand. So that way, again, there are no surprises and you have an idea of what will be expected of you. Another common mistake is overpaying in taxes, and we could be talking about thousands, tens of thousands, hundreds of thousands, depending on how much your business is making, because there is no plan, right? Many of us are operating in spaces where we can take advantage of many different tax strategies, but because we don't know about them and we are not investing in a tax professional to help us uncover what applies to our business, we're overpaying in taxes. So I think for many people, there may be a fear of not wanting to overpay a professional. But if you pay somebody a couple $1,000s and they save you tens of thousands of dollars, that is a win, right? So it's important that you have good tax planning strategy in place so that you are making the most of every dollar that comes into your business, right? Taxes can be a significant deterrent to building wealth. And if we are not doing a good job stewarding those assets, then we'll pay more in taxes than we have to. And then the last common mistake is choosing the wrong structure, or staying a sole proprietor for too long, right? So if you find yourself still filing as or still being taxed as an LLC, and you're well into six figures of profit, you probably should have already switched to an S corp. But again, you probably want to sit with a professional and have them review your individual situation to give you specific advice. All right, so let's close this thing out. Um, Tax planning is key, right? If you have watched this and you're thinking like, "Oh my goodness, I do not have a tax plan in place," I want to invite you to a complimentary call. One of the things that we do is we help you analyze your past 2 years tax returns and then identify opportunities for you to save on your taxes. So if you could use something like that and you want to partner with a financial professional who wants to make the most of your finances and help you do that, there's a link below this video where you can schedule a complimentary call to see how to move forward with that. Um, I also send out a weekly newsletter. It's called This Oil is Expensive, where I talk about different things that can help you manage your money better. And then lastly, tune in for more free information like this, right? We're sharing content multiple times per week where you can just learn about what works better for your finances. So I hope that you enjoyed this session. Like it if you did, comment below, ask more questions, and subscribe if you want more information like this. Have a fantastic day, and I will see you tomorrow.